Successful webinar series. We have today webinar on investment readiness of startup, addressing some of the challenges and opportunities available for startups in the today's era. Our today's keynote speaker, Mr. Mathur, has over 27 years of experience in venture capital, private equity, management consulting, investment banking in India, South Asia, Europe, and USA. He has got 14 years of experience in early stage and growth capital investing. He is working as venture partner with a deep tech sector agnostic fund. He's raised a private equity fund earlier and managed a portfolio of mid-sized companies in the food supply chain. Sir, I would like to inform you that today we have with us a startup from across the country, not just from agri domain, but also from different sector. Our incubation teams of our partner institutions like IIT Kharagpur, NRI Cuttack, Bihar Agriculture University, SKN Agriculture University, their teams have also joined. So without taking much time, may I now invite Mr. Mathur for his address, and later we'll have some conversation over some questions which we have captured for the benefit for everyone. Over to Mr. Mathur.
Great. Thanks, Rahul. And thanks to the NIAM team for giving this opportunity. It's always a pleasure to talk to startups. And the topic that we have chosen is on the investment readiness for startups. I focus on agri startups, but I guess it's valid for other kind of startups who may have joined this call. Frankly, I want this session to be as interactive as possible. So if it's okay, maybe I'll limit the presentation to first 20-25 minutes, and would love to get your questions because I'm hoping that a lot of you would be thinking about fundraising and a lot of questions around how to go about it. So I'm happy to address that. So that's the main agenda for today's presentation. So I'll just give you 4 to 5 slides on what where we are in terms of the startup ecosystem, especially from an agri-tech perspective, how the ecosystem is evolving, and some sort of guiding principles on the investment readiness, what investors are looking for, how the investor preferences are changing, especially in the post-pandemic era. So that's what I want to cover as part of my presentation. I hope my slides are moving.
Yes, sir.
Okay, great. So yeah, these are some of the topics that I will be covering, but I won't spend too much time on the slides, as I said. And this is just to give you a context, in which we should be discussing the opportunity for fundraising. So clearly, the AgTech ecosystem has evolved. It's 15-20-year-old, but it started picking momentum in last, I would say, 7 to 8 years, when an army of entrepreneurs, especially from non-agricultural background, started to build innovations for the sector. As we speak, there are 3,000 plus agri-tech startups in the country, and about 1,500 of them have crossed the proof of concept stage, the POC stage. So that's in my opinion, a good number in a relatively shorter period of time. The investment that has come to the sector is in the range of $3 billion. And I'm not counting investment in the front end of the food supply chain, like food delivery and food brands, etc., because that's a different kind of segment altogether. So it's a good start, but definitely the sector needs much more capital for sure, right from seed stage to late stage. I'm expecting on an average about $1 billion to flow into the sector for next few years. If we can demonstrate some good exits, maybe the pace of investment will pick up further. A very important parameter from a scale perspective is farmer adoption of these technologies. I've been part of some of these studies, not just in India, but across the world. The adoption level among farmers is about 10 to 15%. So if you look at India, maybe about 20 million plus farmers have adopted some agri-tech solution. Again, a lot to cover, but to me, it's a good start, at least, that farmers are digitally connected and open to these solutions, clearly demonstrating that it is having some impact on the farm economics. The whole ecosystem continue to be dominated by digital tech, but I see a huge potential for biotech, deep tech, processing tech, nutrition tech. I think these are some of the areas we should watch out for. Another trend that I'm seeing, that a lot of startups who are domiciled in India are going global. And likewise, this startups from outside India looking at Indian market. So it's interesting. I think in next few years, you'll see a lot of cross-border opportunities, uh, especially among countries which are dominated by smallholder farmers, right? Africa, I would say South Asia, Southeast Asia, uh, Latin America, China. The problem statements are very similar in these countries. Corporate engagement is improving. Most agribusinesses, large agri input companies, food processing companies, they believe a lot of the innovation is going to come from outside their own sort of organization sort of structures, and they are willing to partner with startups. So that's a good trend, and we are seeing some either partnering, some even looking at acquisition, some looking at joint ventures, especially on the distribution side, where a lot of startups, I think, are doing a phenomenal job. Last but not the least, I think government policies are changing for good. There's a lot of support for agri startups. There's an acceleration fund which got announced in the last budget. In fact, it is being housed at NIAM. And there's another fund announced by NABARD recently for agri startups. There are multiple digital stacks which are under uh, various stages of development, like agri stack, crop stack, which is bound to have a multiplier effect on driving innovations in making data available at more efficiently, not just to startups, but across the board to private sector and banks and financial institutions. So digital public goods is going to be key, sort of, I would say, key pillar for disruption into the sector in next decade or so. Most of it will be driven by state governments because the data resides with the state government. So central government can put protocols for data sharing, can put architecture, can put best practices, etc. But the ownership of building and implementing, in my opinion, will largely be with the state governments. And I'm very confident that a lot of agri-tech startups themselves will become part of building these kind of stacks because they need very innovative technologies like use of remote sensing, use of a lot of digital tech to capture, store, analyze data. So this is just a snapshot of what's happening in the sector. In terms of the themes, I think again I won't go into detail because it can take the entire time. So, but broadly, I would say access to good quality inputs is picking up, especially farmers looking for products which are genuine, which can improve productivity. Um, so pretty much, I would say prescriptive selling by startups, capturing a lot of data about crop health, soil health, weather data, and prescribing farmers what to use, when to use. And in that process, they optimize the input cost and sort of improve the productivity levels, right? Farm to fork kind of models, I think that's picked up quite a bit across horticulture, staples, meat, poultry, milk, many categories. Some are doing a basket of products, some are specializing in a few categories, essentially disintermediating the supply chain, making it more demand driven and aligning the supply chain according to the demand. And the demand is coming from mom and pop stores, from retail outlets, from Horeca, from institutional segment. And this is the segment which has attracted most capital. 80% of the capital which has come into the sector has gone in post-harvest and market linkage kind of solutions. Agri-fintech is another interesting intersection of financing and agri-tech. As financing continue to be the core of any supply chain intervention, it's since the whole supply chain is working capital intensive. So how to make credit available to farmers and value chain players using alternate data? How do you capture data around farmer credit worthiness and farm credit worthiness? I think that is becoming more and more important. I've seen use of remote sensing in building farm credit score. The startup called SetSure which has built this score, and CIBIL has also partnered with them. So bankers need not go to the farm for any diligence. They can capture the score and build their underwriting algorithms to finance. Likewise, multiple digital innovations on farmer onboarding, you know, underwriting, creditworthiness, loan recovery, etc. Data and advisory, of course, is a large segment, and there are so many variables in agriculture. So it's a very interesting space. Agriculture is indeed a heaven for data scientists. So capturing data through multiple hardware devices, be it drones, IoT, sensors, satellite image, mobile phones, and building algorithms again, around advisory for use of inputs, for when the pest attack is going to happen, uh, interesting solutions around for banks and financial institutions to build their loan and insurance products. So it's all about how accurately you can capture the data, be it weather data, soil data, farm data, or any other data that is required for the purpose of decision making by the supply chain players. So again, large segment. Of course, monetization has been not very straightforward in this segment, but I think a lot of these startups are figuring out. Some of them are pivoting into supply chain in order to monetize the data. Mechanization is another huge opportunity, especially when farm labor is becoming more and more difficult or expensive. And we are seeing use of computer vision, robotics, drones, even mechanical devices. Even post-harvest, we are seeing some interesting farm-level processing sort of happening now, like solar dehydrators and solar-powered cold rooms, etc. So mechanization, again, large category, huge potential category, and I'm very optimistic that it's going to grow. Last but not the least, controlled environment agriculture, which again, a large segment. And there are some interesting models coming up, especially to make this more affordable, because typically the capex per hectare is in few $100,000. How do you reduce the cost of capex? How do you build a complete supply chain solution around it? I think that's what's happening. Ecosystem, of course, thankfully, enough startups. Of course, we need many more, but as I said, good beginning. Very good incubators like NIAM and Incubation and Manage and AI Idea, Pusa Krishi. Thankfully, at least a couple of dozen good incubators in the agri sector. Even some IITs are taking a very deep interest in building and supporting agri startups. Acceleration programs by foundations, by corporates, by the government is also giving a lot of sort of tailwinds to the sector. Corporate Connects, as I mentioned, is on the rise and very important, because most corporates do have access to a good distribution and a large farmer base, like Sofifco, ITC, DCM Shriram, UPL, whatever. You can think of anyone. I think almost everyone is engaging. I am also co-founder of a platform called ThinkAg, where we actively drive industry startup partnership. Village ecosystem to me is extremely critical, and probably one of the links that we need to work upon is to engage with local entrepreneurs, NGOs, FPOs, especially the farmers or the progressive farmers who have a good credibility among farmers. Because for a startup and trying to sell solutions to farmers, I think there's always a challenge of trust, and that's where you need very strong partnership at the local level. People who can trust the solution, who can communicate the solution to farmers, who can give some sort of soft commitment that the solution is going to work. So that's where the local village ecosystem is extremely important for agri-tech to flourish. Lastly, as I mentioned, the digital platform which are under works, it's going to be fantastic once they are live. And of course, the investor ecosystem. Thankfully, many investors, sector focused, sector agnostic, are looking at agriculture as a potential sector to invest. Investment, as I mentioned, about $3 billion cumulative. It peaked in pandemic about $1 billion plus, but then it kind of tapered down for the last 2 years. I think this year we have seen some bit of reversal already. So last year was a low at $300 million. In 2024, till June, I think we've already crossed $300 million. So I'm hopeful this year we should be closing somewhere between 600 to maybe $1 billion kind of a total investment. Uh, Thankfully, we are seeing a lot of interest in early stage deals. But yeah, late stage deals have to pick up quite a bit. Now coming to investment readiness, which is the topic for today. What are the hygiene factors? First of all, very, very important that the proof of concept need to be demonstrated, which include the validation of the product that you're building. Whether that's product or service, it needs some validation. And very, very important, product market fit. Whether the market is willing to pay for it is extremely important. So how do you build it? Sometimes you're ahead of the curve. Sometimes it needs a lot of education for farmers to adopt the product or the solution. So establishing a PMF is extremely critical for any team, especially someone who's at a seed stage to demonstrate, and someone who's knocking at the doors of investors. I think this is a very, very important criteria for investors to do any further diligence. And GTM, go to market is all, of course, there are multiple channels. You can go through an industry partner, you can go directly to farmers, you can build partnership with local entities, as I mentioned. So I think at least clarity on what is a good GTM for you. I think that articulation is critical. I think another important parameter, especially from this sector perspective, is your resilience, because typically agriculture, there are cycles, good cycles, bad cycles. Some years are good for some crops, some years are really bad for some crops. So resilience is key. The reason a lot of these SMEs and family business have survived years and decades into the sector is their ability to sort of navigate, especially the down cycles, which is extremely critical. Another important parameter is how do you create value? Like in many other sectors, we have seen customer acquisition through discounts and sort of a lot of promotional effort being done. I think when it comes to farmers, it's more about creating value than discount. I think for farmer, it's a livelihood issue, right? They are not going to experiment just because you are a startup, right? So you have to have a very strong value creation mindset to really attract good customers and, of course, good investors. Unit economics, this is a word which you will hear multiple times. It essentially means that everyone in the chain should make money. You as a service provider, farmer as a buyer of the service, the channel partners who are taking these solutions to farmers. So the unit economics has to work at a multiple level, not just at your level or at a farmer level. It has to work throughout the supply chain for the solution to scale. Another parameter which I would say more personal, I like founders which are obsessed about customers and their problems, not necessarily obsessed with fundraising. If you're spending 15-20% time raising fund, it's okay. But if it is 80% of your time, then there are some challenges which you need to sort out, because you need to spend a lot of time in getting the customers on board rather than chasing the investors. Our team composition is another critical factor, especially in this sector, because you're solving multi-dimensional problems which need multidisciplinary kind of a talent. So how do you build your team, which brings multiple talents and skills together, data scientist, agronomist, hydrologist, a veterinarian, and, all kinds of, depending on what sector you are in within Agri. So that is another very important way to look at it. And last but not the least, and sort of, a very, very strong focus on farmers, the problem statement, sitting in Jaipur or in Delhi or any other place in city, it's difficult to imagine those problem statement. And if you start imagining and building solutions, the chances of not getting right is high. So it's very important you spend time in villages and sort of get your problem statement corrected. Sooner you do it, better it is, not just for you, but also for investors, because investors also don't like too much experimentation on their capital. Because it's a risk capital, but it doesn't mean that you are pivoting 4, 5, 6 times before figuring out what is a good model to scale, right? So, what investors look for, as I mentioned, team composition, commitment, complementarity, chemistry, passion to build a new business, focus. Are you, what is, whether it's whether focus on a particular geography or a particular type of solution or particular crop, but I think that focus need to be very, very clear. How does build scale and how when does profitability kicks in? I think those trade-offs need to be clear. I'm not saying one should prioritize one over another, but one can't lose sight of either of these two things. I think in COVID, everyone focused on the top line without focusing on building a profitable model, and they're facing a lot of problem now in for survival as well as for raising money. So that trade-off need to be very, very clear. Part to scale really depends. If you're a supply chain oriented startup, you can see scale right from the beginning, and you need to figure out how to keep that momentum growing. If you're a deep tech startup, a product based startup, it takes time to build products, sometimes months, sometimes years, and then there's an inflection point. So you should be very clear what is the part to scale and what kind of capital is going to support that. Business model clarity, I think another challenge with the sector, because once you start doing something, you get tempted to do multiple things. For example, if you're buying from farmers, you're tempted to sell inputs, you're tempted to do financing, you're tempted to do some bit of mechanization and other services and insurance. I'm not saying that there's a wrong thought. The challenge is you may not have all the skills to do that, right? So you need to define what is your core and what is something which is non-core, where you need partnerships with other industry partners, with other startups, with financial institutions. So I'm not saying ancillary things are not important, but you need to be very clear. Can you do it? If you can't, which are the best partners to onboard and build a holistic solution for the farmers? So clearly, openness to partnerships, collaboration, to me, is extremely critical for scaling of any model in the sector. And of course, investors look for potential exit opportunity. In my opinion, for supply chain oriented model, which is on the input and output side, IPO is most likely. The strategics are more likely where there's some IP, some deep tech, some interesting tech, which strategic buyers are willing to pay for. And lastly, the secondary sale, it essentially means one investor selling shares to another investor. What has changed in last few years? Clearly, more focus from top line to bottom line. Investors are questioning when the margins are going to come, how to improve gross margin, how to improve EBITDA margin, how to improve contribution margins. So a clarity, even if you're not GM positive or CM positive, a very good clarity on when you want to become positive is important. Uh, Clearly, a lot of focus has gone in building distribution models, service models, but product orientation is also picking up. A lot of these agri input e-commerce platforms, for example, are developing their own private labels to improve the margin mix. So whether we like it or not, it's going to be a distribution plus product play. As I mentioned, pure platforms to partnership led platforms, they are going to become more and more common. There is some bit of specialization that we are seeing in the supply chain already, whether in terms of geographies or crops. Pure databasing, data collection models, I think their proprietary stacks are losing value. So the focusing on analytics, the use of AI, Gen AI to build models which can develop decision-making tools for the value chain players, especially for farmers. I think they are going to pick up. And as I mentioned, the agri tech or supply chain tech kind of models, diversifying into more rural tech, and is seeing intersection of agri tech, fintech, biotech picking up, deep tech in some places, and last but not the least, the climate tech, solutions for to drive sustainability of supply chains, like reducing post-harvest losses, reducing GHG emissions, improving water use efficiency, improving energy efficiency. I think these kind of models are going to pick up as well. So I'll stop here and sort of happy to take any question.
Thank you, sir. Before we start the question, I'll have one opportunity to ask the question. Sir, can you share any examples of the successful startup which you have witnessed and you might have invested also in them? If you can share possibly.
Yeah, there are many. I think not. It won't be appropriate to just pick one, but yeah, I can tell like one startup that I work with is out of Aurangabad. I think you should definitely Google it. It's a great startup called S4S Technologies. They build a microprocessing solutions at the farm, especially solar dehydration. A very interesting story. Bunch of ICT Mumbai graduates and trying to sell solar dehydrators. It didn't work for a few years. They wanted to finance it. Banks refused to finance it because they said you can't really mortgage a dehydrator, and the farmer said, why should we buy it? Who's going to buy these products from us? So they built a closed loop model, selling fresh vegetables and spices, etc., to farmers, and with a buyback guarantee that kind of worked quite well. And then they went to cooperative banks for financing. They got loans at 15%. Then State Bank of India approached them that it can be classified under Agri Infra Fund, and the cost of financing came down to about 6%. And then the model really took off. So as we speak, 3,000 micro entrepreneurs in Aurangabad, mostly women, earning somewhere between 6 to 10,000 rupees a month sitting at home. It's a great example of what kind of impact agri tech can create. Interestingly, it was supported by some impact investors initially, like Acumen and Factory. But once they start scaling, like Chirate came onto board, and they're closing another big round with a very marquee venture capital investors. So again, a very good example how impact capital can drive commercial capital. They're doing about 20 crores a month to 50 crores kind of a turnover, almost CM positive. Um, so yeah, fantastic case study of how tech can drive employment, reduce food losses, improve sustainability of food supply chain, and build a commercially viable model. I'm very hopeful, and this is just one cluster in Aurangabad. Just imagine how many clusters are possible across the country. So very hopeful that with three clusters in place, probably will be ready for IPO. So finger crossed. That's one. Another one is Satshore out of Bangalore. It's a space tech startup, but with a lot of applications in agriculture. They were the ones who developed farm credit score using some 22 variables, which are captured through remote sensing. They found it very hard to sell to banks initially, and took few years before ICICI, Kotak, HDFC kind of adopted it, and they become customers. And interestingly, they became investors into the company, which gave a lot of credibility to the organization. And then Sibyl also came in as a customer and investor. So a very interesting case of how financial innovations can be driven using remote sensing in agriculture at scale. As we speak, they sell few thousand, 10, 15,000 reports a month to banks. Many of these are new to credit farmers. So interestingly, improving the chances of farmers who are unable to get loans from banks to get sort of institutional financing with these kind of models. There are many others like I know Big Heart. I think one of the few players who are direct to farmers right from the beginning. Built interesting e-com platforms. They are probably one of the most downloaded app in the country after NIAM. I think they have 20 million downloads. And I think a fair number of farmers transacting on the platform, and built very frugally as compared to many other startups. They never had money. They found it very difficult to raise money initially. So build this model very, very frugally. And so another thing which I forgot to mention, capital efficiency is very critical. In good times, people could raise money, and you know, with $1, many startups created revenues of $2, $3. But the new breed that I'm seeing is far smarter. With the $1 of capital, I'm seeing startups doing revenues of even $5, $10, $15, even $20. So I think that's another thing that all startups should think about is capital efficiency, right? Whether it is capex or working capital, how efficiently you can use it. It's going to determine. Is one of the key success factors, in my opinion. Yeah, so I can go on and on, but yeah, a lot of a lot of interesting startups.
Yeah.
I think the common attribute I would say is strong commitment, frugality, very, very farmer-centric approach, hustlers, never give up, open to collaboration, always grounded. I think these are common attributes if I look at um, some of the better one startup. Though I salute all the startups in the sector for trying something new in agriculture, but in general, I think these are some of the common attributes for the founders.
Thank you, sir, for I think this could be the wonderful answer we could expect. So, anyways, startups, it's your turn. Please ask questions. Okay, no problem. Thank you. Otherwise, I will ask another question.
Yeah, they may write in the chat box if they're finding it difficult.
Yeah, that is also possible.
So good morning, Hemendra. So this is Kaushendra. So I have one question. The investors are investing in pre-harvesting side or post-harvesting. Can we categorize? Do we have that kind of data that we can say where they are focusing more?
Yeah. So as I mentioned, so out of $3 billion, approximately $2.5 billion has gone into post-harvest market linkage, and 20% in pre-harvest plus data plus mechanization, etc. So clearly lopsided. I think probably post-harvest to me probably was a low hanging in some ways, but to me pre-harvest also is a fantastic opportunity, especially as I mentioned, mechanization, farm mechanization. Even on the product side, good quality inputs. I'm seeing a lot of startups on the bio pesticide, biostimulants. That category is picking up quite a bit. Even optimization of agricultural inputs through some interesting data analytics. So clearly, pre-harvest has its own opportunity. Typically, the margins that I have seen in pre-harvest are better than post-harvest. Post-harvest, you can make money if you do a bit of value addition, do a bit of processing. Otherwise, the trading margins are frankly, I don't call it an innovation. It's just putting a tech layer, but ultimately doing trading. I think those models are going to become less and less valuable.
Okay, thank you so much, sir.
Thanks.
Good morning. Just wait a minute. Yeah, anyone?
Hi, sir. This
Mathur
is,
sir,
Sure.
yeah, sure, Manish,
Right.
please go on.
8 minutes, sir.
Mathur sir, Manish this side from AgroSplash. Sir, we are building a platform, collaborative platform for the financial inclusion in agri-food ecosystem, sir. Sir, so my question from you is, we are seeing agri dairy credit as one of our vertical. So how you see the future of agri-food credit in India, sir?
Right.
Particularly, yeah.
Yeah. Of course, credit is a great opportunity. As I mentioned in several of my articles and webinars, the cost of capital in agriculture is upwards of 20% because a lot of farmers depend on informal credit. Very hard to make money when you pay 3% per month as an interest rate. So making institutional credit available to farmers, affordable credit, is a large opportunity. And the credit for the last financial year in agriculture under PSL for agri was almost 25 lakh crore, the highest ever. So even part of that, if can ride on financial innovations, I think that is going to be interesting. Dairy is another important segment. I did not talk much about it, but I believe cattle financing is a large segment. How do you go about it? How do you find good farmers? How do you figure out milk productivity? I think the good thing about cattle financing that milk is being poured every day. So there is almost a daily collection of milk and almost a weekly to 10 days payment to farmers, right? So in fact, farmer has the ability to pay back loans maybe on a weekly basis or a 10-day basis or at least monthly, if not weekly. In good cattle financing model, I've seen farmer can pay loans in like 2 years, with the milk income, and then the cattle is free. So I think, but again, you need to be monitoring assets. Like you need to figure out how the lactation management is done. How the milk productivity is improved. There is an impact of cattle nutrition kind of practices. So I think that is where the challenge and opportunity. How do you figure out farmers who are worthy of it, and how do you do underwriting depending on the cattle on which you're giving the loan, and how do you build collection models. I have seen startup, one of the cattle financing startup that I work with is Credin. Almost 60-70% of loans are digitally dispersed and digitally connected. So that's a fairly good number in my opinion. And the NPAs are very, very negligible. They do triangulation of farmer credit score, data coming from cooperatives on milk pouring, and the data coming from bank statement on the payments made to the farmer, and they figure out sort of whom to lend, how much to lend, and stuff like that. But yeah, a high opportunity area. I think one more thing on credit side, I think you need to have an underwriting expert. It's very difficult. Of course, not impossible, but for someone coming from a tech background to build underwriting skills, it takes time to build underwriting skills. So my suggestion, either have a banker as a founder or at least a banker within the team who can do it.
Thank you very much, sir.
Sir, very good morning, sir. Sir, this is Rajesh Singh, sir, from Agri, Pathon Agri. So can you hear me, sir?
Yes, I can.
Yes, sir. So we are building some innovative machines for agriculture, like sir, mini baiters and maize threshers. But sir, is a startup ecosystem is ready to support innovation, agri innovation in India, sir? Because I think, sir, we are developing some machines by self, but still we are not getting any support from any technical support from any ecosystem from India.
What kind of support do you need?
Sir, testing and technical support, sir. So so we are developing, sir, some very innovative machine, like sir, mini waiter and multivator, and sir, maize thresh. That is very innovative and very low cost machine for farmers. But sir, I am asking from, I am giving a fund for my startup India and startup Bihar. But sir, I always say India is supporting innovation, every innovation. Sir, I am asking from a technical sites, but no, I think till date, sir, I never given a support from a testing sites and from any technical advice side. Just we are talking about that kind of innovations, sir, but actually the system is not supporting innovations, in my view, sir.
No, I think you have a point. So of course, this whole ecosystem led by startup is new. So I won't say that we have really cracked the ecosystem, and that's why the scale, the initial challenges still persist. But yeah, having said that, I think at least there are some state government, there are some institutions who are more progressive than others. I think as a startup, you don't have a choice. If someone says no, you go to some another one, and you have to keep trying. So I don't know what are the right institutions.
Sir, testing cost is so high, sir. I test my machine in Pusa, sir. I pay 1,80,000 for one machine for testing.
I get
It's
your
very
point.
difficult for works.
I get your point. The cost of testing continues to be high. In fact, the acceleration fund that I talked about, I think a part of this fund is supposed to go for technical validation. And I think state governments need to incentivize more validation and testing at a lower cost. All I can say, work in progress. We all have to try being part of the ecosystem. My request to team at NIAM and other institutions who are on the call to make it a point to the government and policymakers and institutions and ICR and everyone you meet. How do you make validation cost affordable for startups? I totally agree, and I completely have full empathy on this with you. This is not just your challenge. I've seen this challenge with multiple startups. It's getting better, but we are not there. We need to keep trying.
Thanks, sir.
Yeah, Ranjan, you have a question.
Yeah. Good morning, sir. This is Ranjan from Novosis Private Limited. Actually, we are into IoT-based advisory solution and using GIS as well for the advisory kinds. My question is, how you think the future, as McKinsey is showing very high demand for that, but assuming that the Indian farmers' mentality and difficulty in adapting the new technology, what do you think that the precision farming advisory services future is in India?
Yeah, so look, a farmer is an entrepreneur, right? So whether it's precision farming or any data analytics or any hardware device, I think the cost benefit ratio has to be crystal clear. If you look from a farmer side, he's earning $2,000 a year, right? 150,000 gross income, uh, which is again subject to weather vagaries and some policy impact, etc. So you can imagine 80-85% of Indian farmers have very limited room for experimentation. So to that extent, the models, especially around data and advisory, I think that if I'm paying 500 rupees as a subscription on a monthly basis, what is the additional that I'm getting out of it? I, I, I think farmer gets some benefit. Unfortunately, especially in these kind of models, I haven't seen a clear-cut quantification of benefits. And that's where I see the challenges. My guess is a lot of advisory, especially around weather and crop health and soil health, may become part of the public goods as a sort of over a period of time. And startups like you ideally should be focusing more on analytics and decision making tools and figure out if not farmer is not paying, then who else in the supply chain can play, right? But at the bottom of it, it's, as I mentioned, unit economics. What is the benefit that is going to look at harvester? Farmer hires harvester at, I think, something like 2,000 rupees an hour. But by doing so, he saves 5,000 rupees of manual labor, right? So that equation is very well established in his mind. I think with some of these new technologies, that is not very clear. What is the benefit which is accruing to the farmers? I think that's where I think startups like you and many others have to keep on demonstrating that so that it becomes an easy sell over a period of time.
Yeah, we are doing the validation part over a period of time, but it varies from crop to crop as well. Because if you think from the prospect of horticulture, it is very high. Otherwise, if you go for the cereals, it obviously is going to be very low because the price variation is very low in this comparison.
So start with crops where it is easy to sell. I think it's very tough to master multiple crops, etc.
Yes.
So I think that's another area I must encourage all startups to build more focus. Yeah. Each crop is billions of dollars, and each village in India is $2.5 million of economic opportunity if you club input output financing. So if you're in 100 villages, 1,000 villages, 2,000 villages, 5,000 villages, there's enough market. So I think, of course, it's very tempting to say pan India, multi product, multi service, but sometimes it doesn't work, especially early stage when you are starved for resources, both financial and human resources. I think be a specialist and crack one crop where you can, like if you IoT sensor devices, if you see, I think most of the application is in high value crops like pomegranate and grapes and some spices.
Yes.
So I think bring that focus. It's
Yeah, it is not possible to do pan India initially. It is not at all possible.
Not even pan crop, because each crop has its own nuances, right? How can you build algorithms, whatever precision tools across crops in one go? So one at a time, monetize, look at another crop and things like that.
Thank you.
Very rightly said, sir. Means focus is very necessary, as we also means and numerous times we tell our startups during this incubation program also to let's keep a focus and may be a leader of one product or service, and then after pivot yourself in other things. We have one startup from this last few couple of batch earlier. Gunna Master is the company name, and they are focusing on the only on sugarcane solutions, their breeding, their all diseases and consultancy on field, off field. Means everything they are catering to the only and only on the sugarcane. You can see in the sugarcane industry in India, and it's a huge opportunities. And
400 million tons of sugar cane and 30-40 million tons of sugar, yaar. Sugar cane solve kar lo bahut hai.
And they have grown multiples in a year, single year only. So this is one good example we have. So we have next question from Bakret. I think there. Since they're not there now. So any more questions, or should I means ask a question to sir? Sir, when a startup can decide to pivot means whether if he is struggling with the one business model or with one product. So what is the means exact time when he should decide now I should pivot, I should try something else, or after growing at a stage, after that he decided to pivot. What do you say, sir?
Very good question. Yeah, I think it's a. I'll tell you one of the challenges which I see a lot of startups, the founders are from a tech background with a strong product obsession. My product is the best in the world, and it is bound to sell. The challenge is when you go to the market, market is not ready to accept or not ready to pay. So my suggestion to all founders here, tech is good, but you should always be in sync with the market, right? So typically I say even if a product is 70-80% ready, just go to the market, test it out, find good partners, and then co-develop so that you neither overbuild nor underbuild it, right? And so I think that kind of approach, the strong market orientation is key, because it's the market which is going to teach you when to pivot. If you're sitting in your laboratory, you will never find out when to pivot. So I think that's if you hit 10 customers and 9 says, guys, sorry, or come 3 years later, it's time to pivot, right? If 8 out of 10 says, great, it's going to work with so and so changes and sort of some specification, etc., which can be managed, or with some changes in the product or whatever, and then it's okay. If it's some plus minus 20% is fine. But if it's a solution which is no one is willing to pay for it, better to look at something else, right? As I always say to founders, you're not doing a PhD thesis here, you are building a business. So, मतलब इन्वेस्टर भी पैसा देगा, लेकिन कस्टमर पैसा नहीं देगा तो इन्वेस्टर भी नहीं देगा. So I think the proof of the pudding is in selling, all said and done.
Right. Okay. So any question? Okay.
Feel
I
free to
think
ask. Don't no question is a stupid question. I must tell you.
yes, very right.
To ask your doubts will get clarified.
Sir,
Mathur sir,
there are
I have
yeah, Manish, go ahead, Manish.
Mathur sir, I have a question. For earlier startup like us, advisors are really important for us. So, how to find right advisors for startups like who just started?
Good question. Very good question. And I strongly suggest startups to look for good advisors and mentors at the beginning of the journey, क्योंकि तभी सबसे ज्यादा challenges होते हैं. So I think first you need to be very clear कि आपको advisor कहाँ चाहिए. मतलब do you need a tech advisor? Do you need a market kind of advisor? Do you need advisors for governance and financial controls? Or do you need a business advisor? Do you need an investment advisor? Or maybe you need all of them or some of them, right? So one is clarity कि भाई हमें advisor लगने कहाँ पर हैं. And yeah, I think then it is from the ecosystem. Yeah, well, essentially the incubators can guide you, your customers can guide you. I will also encourage everyone who is on the call is to be a bit more extrovert. Yeah, this sector is all about, as I said, collaboration, partnership, and working together. And thankfully, there are multiple events which keep happening in the sector, like this webinar, for example, and I'm so glad that it is open to all the startups. So be a bit more outgoing, more extrovert. Between September to February is the event season. Yeah, that at least 8 to 10 agri-tech events only which is going to happen. तो उसमें आप काफी लोगों से मिलोगे, कुछ इंडस्ट्री से, कुछ इन्वेस्टर कम्युनिटी से, कुछ पॉलिसी साइड से, and you end up you strike chemistry with some of them who can come as an advisor, right? So be part of this ecosystem. I manage a WhatsApp group of agri entrepreneurs. There are 300 plus agri entrepreneurs. और काफी खुद ही collaborate कर लेते हैं. मतलब within 5 minutes of asking a question, you get an answer. So you build these communities so that you get not just startups, mentors, but right buddies. I think the reason this ecosystem has grown and survived is because a lot of startups has helped other startups, even if they are seemingly competitive. I can tell you in my journey, I've connected so many startups which potentially would be very fierce competitors in the future, but they collaborated कि यार ठीक है अभी लड़ाई करने का टाइम नहीं आया. And I think it's a large market, right? So I keep on saying, yeah, when all agri tech put together is not even 3% of our agri GDP. So why fight now? To fight 10 years later. So thankfully, there are a lot of startups who are willing to collaborate and talk to each other. But yeah, I think you should be very careful, matlab, in terms of what kind of advisor you need. It is also a function of chemistry that you strike with them. Are they willing to devote time to you? It's not about number of hours, it's about the quality of time, the quality of input which are going to come. And again, I think as an entrepreneur, probably you know what to do. I think as an advisor, especially on the investment and business side, most of my advice is what not to do. कि, काफी कुछ गलतियां करके आप सीखो. Each गलती is 5 months, $1 million kind of sort of mistake, right? So it's about committing less mistakes. I'm not saying अगर आपको mistake ही नहीं करनी तो फिर तो मॉडल आप बड़ा रिस्क फ्री मॉडल खेल रहे हो. तो होती हैं गलतियां होती हैं, बट द कॉस्ट ऑफ मिस्टेक शुडंट बी वेरी हाई. एंड इफ यू हायर राइट एडवाइजर मेंटर, दे विल गाइड यू व्हाट नॉट टू डू, where you have to be careful and stuff like that. So it's an ongoing process. It's like courtship, yeah. It's no different from that. You have to have a courtship. There has to be mutual respect, mutual trust, mutual understanding, etc. for a good mentorship relationship to sort of grow further. So in your mind, you should always be thinking about good people here, as advisor, as employee, as board members. You should always be hiring in your mind, even if you don't have money.
Thank you, sir. Thank you very much.
Sir, there is a question in chat box from Bakrit. You can read, or should I read, sir, for you?
Not very clear from this. I think yes, some problem with microphone, but happy to sort of connect offline if that's okay, because I need more clarity before I answer. Maybe
Okay.
you can give my
Okay.
number.
Yeah. We'll connect you, sir. So one more question, sir. Means there are many early stage startups who are trying to raise funds, but they don't know means what valuation process means they should go through. Because when they are up to the VC level, then there definitely there is some maturity. But when they are at the angel level or very early stage financing, then they are little bit very confused about what kind of valuation process they should go through so that they get a right valuation at that particular time.
Valuation, especially early stage valuation, is more of an art than a science. So I think the general thumb rule, how much money you should be raising, I typically advise 18 to 24 months of capital. ज़्यादा रेस करोगे तो एफडी में पड़ा रहेगा, और कम रेस करोगे तो you'll be perpetual fund raiser, right? So one is how much clarity on the fund raise, right? So be as precise, ना ज़्यादा ना कम. Secondly, valuation is again, as I said, when you especially pre-revenue or early revenue, it's very difficult to link it to the revenue, etc. Then I think you, as an investor, you typically use some benchmarks from the industry or similar startups, right? If there's an IP involved, there's a premium attached to it. If it's a very senior, seasoned team, whose team की value ज़्यादा होती है, right? How much time team has devoted and stuff like that. DCF to me is not very attractive at the beginning of a big cash flow है ही नहीं, तो मतलब क्या आप discount कर रहे हो? It's all in the future, right? So in general, I think good VCs, good investors, they also don't want to take too much of a stake at the beginning. So irrespective of how much you're raising, but typically 10, 15, 20% dilution at seed stage is a good. If you dilute 30, 40%, becomes difficult to raise more money, because cap table becomes very, for most investors, there should be enough left for the founders, right? So, so I think there are multiple trade-offs, both for founders and investors. I think as investors also we need to be a bit more sort of smart. It's not about the pie of the cake, it's the size of the cake, right? So one has to be very clear कि मैं 10% ले रहा हूँ एक बिजनेस में जो $1 बिलियन हो सकता है, ये 25% ले रहा हूँ जो शायद 10 मिलियन भी नहीं हो सकता. So it's not about कितना स्टेक ले रहे हो. And for founders also, I think stake is, I always say, it's, equity is your blood. Yeah. If you have to be very, very careful कितना देना है, कब देना है, किसको देना है. I think you have to be very, very careful. You should negotiate for sure. Negotiation की beauty ये होती है कि more than negotiation, you will learn a lot about each other. Yeah, investors learn about founders, founders learn about investors. Right? So you should, अगर आपको सब कुछ पसंद आ रहा है तब भी negotiate करो. That's my piece of advice.
Sir, one advanced question means to this means once the ठीक है funding मिल गया startup को, what should be the best practices where he can engage his investor post investment, कि उनके साथ में कैसा relationship cultivate रहे और उनका engagement कैसे बना रहे startup में. How can you give some steps?
Very, very delicate relationship, the investor-investor relationship. It's a marriage with a agreement to divorce. Very delicate relationship. तो आप 7 साल के लिए जा रहे हो, राइट? आपको वैल्यू क्रिएट करना है, 7 साल में एग्जिट भी चाहिए, 7 कहीं को 5 में चाहिए, किसी को 7 में चाहिए, बट अल्टीमेटली यू आर नॉट देयर फॉर एवर, राइट? So I think to me it's all about communication. Yeah, you have to be very, very open, transparent. चैलेंज जब होता है जब आप स्टार्टअप के बारे में इन्वेस्टर को किसी चीज और से पता लगता है कि ये चल रहा है उसमें. दैट इज अ वेरी स्केरी सिचुएशन. So you should communicate. As I always say, the good news can take the ladder, but the bad news should take the elevator. So you should communicate, over communicate if required. And likewise for investor, they should also spend time. I think one thing which I find challenging with a lot of investors in the sector, कि वो सारी मीटिंग सिटीज में करते हैं. आई ऑलवेज से टेल देम कि यार आपका जो मॉडल तो गांवों में काम कर रहा है. तो एज इन्वेस्टर, इंक्लूडिंग माई सेल्फ, वी हैव टू बी मोर ऑन द फील्ड विद द फाउंडर. आई थिंक दैट इज इंपॉर्टेंट एट्रीब्यूट एज एन इन्वेस्टर, क्योंकि सब जगह फ्लाइट नहीं जाती. टू एंड अप taking a cab or a train to a lot of these places. So as investor, do you have that? Are you genetically inclined to travel on road? Are you open to go to villages and be in places probably where you may not be very comfortable with? So I think it's a tricky relationship. But as I said, you need to engage, you need to communicate, you need to derive best out of investors. Like they demand best practices from founders. Founders should also demand customer लाओ, अच्छे लोग लाओ, talent लाओ, connects लाओ, and that's how this relationship flourishes.
Yogesh, you have a question. You there, Yogesh?
Yes, sir.
Okay.
Thank you for the insightful session. You did mention about the challenges with data collection and quality data in rural and agri ecosystem. What are the tools and technologies currently being used and are available? And I just would like to bring to your attention, we have developed a farmer-friendly world-class tool where data collection can be done with quality, traceability, and credibility. So how can we collaborate? And I would like to get your insight about what is available and what can we do.
Right. So of course, this data collection, it's changing for good. All I can say, we need much more hardware devices. I'm seeing Government of India putting weather station in every village block. We are seeing a lot of application of remote sensing for data collection, especially land boundaries, crop signatures, etc. IoT sensor devices. I think we probably need to become more affordable for a mainstream adoption for the purpose of data collection. So again, I think it's an evolving ecosystem, but you should be very clear what is the role that you are playing in that. To me, as I mentioned, that a lot of these data stacks, at least the foundational data stack, will become public digital goods over a period of time. So if you are into hardware, how can you support that development, or how are you specialized? Like the 50 drone players or who are doing agrochemical spray, how do I figure out which is a better one? Even drone applications are going to be used for data collection. So is your IP or proprietary in the hardware side? If not hardware, and it is in on
It's
the
a user
data.
data collection, sir. It's a
Sorry?
data that farmers or the farmer organizations who fill on the ground for various purposes.
So, okay, if it is data collection from farmers, the question is who's going to pay for it? As I mentioned, just a pure farmer database may become less and less valuable over a period of time because a lot of this is going to be owned by the government. So you need to figure out what kind of data. So more like go to bank and say, "Ki, guys, can you lend to these farmers whom jiska data mere paas hai?" And understand from them what additional data would they need for lending, right? So it has to be more use case basis data collection, right? Not like a general database, right? So I think you have to be careful with data because it's a expensive exercise. It takes time. So either it has to be super granular, super accurate, easy to plug and play, easy to analyze. What is that that your data, especially if it's farmer data, how it is different from other databases which some other startup might have? Is it really leading to some applications, right? I think that is an important question to ask.
Thank you, sir. I'll send you some detail via NIAM team. Please take a look.
Sure.
Okay, thank you, participants. Friends, we are about to finish the webinar. If any last question is there, we can have Mr. Mathur to answer. Otherwise, we'll close here. Anyone?
Sir, one quick question.
Yeah.
So you mentioned that investors generally wait for 5 to 7 years. So how much return generally do they expect during exit?
Typical expectation is 25% IRR, which means tripling of investment in 5 years, roughly. So if they put a crore, they would expect 3 crores in 5 years. Generally, 25% is the expectation. I think it's again a personal thing. Even if you deliver 15-20%, it's good. If you can do anything about 25, it's phenomenal. We need those kind of success stories for investors to come into the sector.
Okay, fine. Thank you. Thank you so much, sir.
So, startups, we are closing this session here, and we thank our today's speaker, Mr. Mathur. Thank you so much, sir, for sparing time out of your busy schedule and enlightening us with the different perspectives. As an investor, you have definitely shared many insights and have solved many queries of the startups attending today. Thank you so much, sir, once again. Thank you, all participants.
Thank you. And
Thank you, sir.
Thanks, sir.
Thank you, sir.
good luck.
Thank
Keep
you.
up the
Thank
good
you.
work.